Hey everybody, what is going on? It's Randy Wolfe here and welcome to today's video. If you are new to the channel, this channel is all about explaining real estate investing A to Z, all the things that you need to know to be successful. So if you haven't yet, be sure to subscribe. But today's video, we're going to be talking about a strategy that I'm going to lay out for you that will show you how to build a $3 million real estate portfolio in just 3 years. And the best part of this video is the fact that it's going to be tailored and show you how you can do that even if you don't have money to put into your real estate investments. Now, one of the things that I want to say is this strategy we're going to talk about is not necessarily something that you would do forever. All right, in this video, I'm laying the strategy out and it's very specific. Okay, again, it is for someone who has no money that they can put into real estate investing. Obviously, we're assuming that you have a job and you can support yourself or you have some form of income coming in. But I'm going to show you with this strategy how you can use it, build a $3 million portfolio over the course of 3 years and make it work for you. I did a video a couple of weeks ago and I got a little bit of flack. I had some comments, people were commenting about it. And it was a video. If you didn't watch it, you can check it out. It's about how to retire in 15 years with real estate and how to build over $6 million worth of income or have $6 million worth of real estate that's free and clear by using 15-year mortgages. And one of the things that some people commented, and I appreciate every single comment I get on this channel, whether it's supportive or not. I love hearing people's feedback. Hopefully we get more supportive feedback than not. But one of the things that some people were saying was like, well, hey, to do that, you'd have to have a lot of money to put into down payments. And some people were talking about how, well, yeah, but it wouldn't cash flow 15-year mortgages nowadays. They're not going to cash flow because of interest rates. And all of these comments were great feedback. But the thing about it is, in that particular video, like this one, I was explaining a specific situation. Specifically, someone who wants to be able to retire in 15 years and have over $6 million worth of equity. And so oftentimes these videos are giving you a lot of great insights to how wonderful real estate investing can be. And it shows you that anybody can do this if they get educated, they learn, and they go at it, and they have discipline, and they get after it. But each one of these strategies, they might not necessarily be for you. This might not, the strategy today is going to teach you a lot. For those of you who are new to investing in real estate, it's going to teach you a whole lot, but it may not necessarily be for you. If you're someone that has a high paying W-2 job and you have a lot of discretionary income that's coming in, probably not going to do this strategy. Okay. Still watch, because you may find some insights and some nuggets in it. But again, this is going to be for someone that is currently able to support themselves, but they don't have any discretionary money that they can put into investing in real estate. All right, so now that we've kind of clarified that, let's talk about this strategy. Now, I've made some notes, so I'm going to look at my notes here a little bit because I'm throwing a lot of numbers out, and so I want to make sure I get my numbers right here. So basically, the idea is you would go in and you would find a deal that you could buy for $100,000, and I wanted to use nice, simple numbers. $100,000 in this scenario this is going to be the typical deal that we're going to talk about. $100,000 purchase, and it's going to need $40,000 worth of renovations, and the after repair value is going to be $215,000. Now, I just threw some information at you, and you may be saying, hey, what does ARV mean? What does that even mean? Check out, I've got a video that talks all about on the channel about ARV, so be sure to check that out if you don't know what that means. And the second question that people are going to immediately ask is, how in the world do I find a property that I can buy for $100,000 that needs $40,000 of work and is going to end up being worth $215,000 once I renovate it? How do I calculate renovation costs? How do I do any of these things? How can I fund that? How do I do that? The ins and outs are on this channel, and you can see all of those videos to answer all of those questions. I have a video series. I also am going to put in the notes of the show here the BRRRR Mastery video series. You can watch that, and that's going to give you a ton of insight, okay? But for the purpose of this video, keep watching. I'm going to assume that you kind of know some of the basics about it, but if you don't, watch the other videos, okay? But you find this property. You get it under contract to purchase for $100,000. It needs $40,000 worth of work. and after it's been renovated, it's going to be worth $215,000. Now, what you're going to end up doing is, because again, in this scenario that we're talking about, you don't have any money to put to a down payment. You don't have any money to pay closing costs. You don't have any money to pay carrying costs and holding costs. None of that stuff. Like you have no money that you can put into anything whatsoever. So in this scenario, what's going to happen is you're going to go and you are going to get a hard money loan. So you're going to get a hard money loan. If you don't know where to go to get that, again, tons of stuff in the video. You can comment. I can send you a link to some of my preferred lenders, and that's going to end up, they're going to require 15% down for that hard money loan. Okay, so we're going to assume 15% down. Some you might get for less down, some more, but 15% of the purchase price. Okay, so that means that it's a $15,000 down payment. The hard money loan is going to finance the $85,000, and then basically you're looking at the $40,000 in repairs. They would finance all of that. So your hard money loan is going to be for $125,000. Now, instead of you having to say, well, okay, that's great. Where'd I get $15,000 from? I don't have the money. You're going to borrow that money from a private lender. And instead of getting 15, you're going to actually get 35. And I'm going to explain why in a moment. So you may be asking yourself, well, how do I do that? Again, tons of video on my channel that talk about this. But so you're going to get $35,000 from from a private money lender. This could be a friend, this could be family, this could be anyone that's willing to support you, and they're going to be in a second lien position. I won't get too much into that on this video, but you're going to have a promissory note, you're going to have a mortgage, all the things in a second position behind the hard money note. And so you're going to basically, when you do this, you're gonna hope that your renovation, you can get the property renovated in 30 days or 3 months, and you're going to be able to refinance, get a tenant in there, refinance, and basically have a refinance finished up in 4 months. Okay, now that's a tight timetable. I just want to be very transparent. Tight timetable, but again, this strategy, I'm going to talk about some of the things that are going to be hard and some of the things that will be easy. But basically, though, in 4 months, you're going to refinance. Now, during that period of time, you're going to have holding costs. And this is something to where new investors get eaten alive when they don't factor in holding costs. What am I talking about? Well, obviously the big one is you have your payments to your loans, your hard money loan and your investor. You also are going to have things like prorated property taxes. You're going to have a bunch of utilities that you're going to be paying during the project while it's going on, stuff like that. And you're going to have insurance. So all of these things you have to factor these in, because if you don't, you will get crushed. So basically, a good estimate of this, and again, I've kind of looked at numbers, and it varies where you're located, of course, but over 4 months, you're going to have about $8,000 in holding cost and debt service. Debt service meaning like paying your loans. So imagine if you didn't factor that in, you'd be in trouble. All right. Then in addition to that, we're going to estimate $4,500 when you purchase the property in closing cost and origination fees and stuff like that. And then we're also going to estimate $3,500 when you refinance the property in closing cost. Okay. So basically you've got the $15,000 for the down payment that you're borrowing from the private money lender, but you're also going to borrow another $20,000. And that's going to cover all of these costs, which come out to be about $16,000. So it's going to give you like a $4,000 cushion in there for any unexpected holding costs or anything like that. Just a little bit of a buffer during that project for, call it a rainy day buffer. All right. And so now with this project, for holding costs, debt service, all the things, everything, you're in this for $160,000. Okay, $160,000. Now, you go through, you have the property, you renovate the property. Again, tons of videos on my channel that talk about how to do this and estimate repairs. But you renovate the property. Now, once that property is renovated, you work hard, you move fast. It's nothing too crazy with the property that needs to be done, and you're able to renovate it in 2.5 months. You end up, it takes another 2 weeks to get a tenant placed. You get a tenant placed in there. Now you're 3 months in. And now you start the refinancing process, and by the end at month 4, I should say, is when you refinance. You have the refinance. At that point, you're going to do a cash out refinance and you're going to get 75% of, or excuse me, I shouldn't even say that, because actually you could do what's called a rate and term to pay off your debt. And that's all we're going to do. We're not trying to extract more money out of this. You're going to basically refinance and pay off the 160. Remember, we've got the amount that the hard money, we have the hard money lender, plus we have the amount that you owe your private money lender. That 160 is going to get everybody made whole, and you're going to refinance it with a 30-year fixed mortgage. Okay, that 30-year fixed mortgage, we're gonna assume, again, you know what they say about assuming, but right now at this point, you can get a 30-year, certainly right now, for about 6.75%, depending on what you got going on with credit and that sort of thing. And again, there's on this channel I talk about a ton of ways. I got a video that talks about 7 ways to finance property, so I won't get too much into that. But you refinance at $160,000. That's 75% of the value of the property, which is $215,000. Remember, that's that ARV, after repair value. So you're going to rent this property. Again, wildly depends on where you're located. Okay, so some places, you know, we're talking it could be over $2,000. Some places it's a lot less. I know what some of you are thinking who are in like California, like where are you going to find a deal for $100,000? It just really depends on where you're located, but we're going to say you rent it for $1,850 a month. That's a good rent as far as looking at kind of a broad picture across the country. $1,850 a month. Your principal and interest on that is going to be $1,038. Okay. Your taxes and insurance on that also wildly varies depending on where you are. We're going to factor in $350 a month to cover taxes and insurance. Again, this could vary a lot. In South Carolina, rental properties are assessed differently than a property you live in, and it just wildly depends on where you are, even down to the municipalities of where the property is. Next, you are going to be a smart investor, and you are going to set aside money from the rent every single month to account for repairs, to account for CapEx, and to account for vacancy. Okay. Now, as you are growing in your real estate investment journey, the amount that you set aside can vary a little bit, because hopefully you're being smart and you're putting aside a lot of money and you're building some reserves up, okay? But for this, because things are going to be tight in the beginning with this strategy, you're going to set aside $275 a month for repairs, for CapEx, and for vacancy. Now, many people who are experienced investors that are watching this video are going to say, well, you probably should set aside more. You know, CapEx, you got one HVAC unit that goes out and everything, you know, your whole set aside money is gone. And that would be true. But we're also factoring in that those things are updated. So like when you bought this property, we're factoring in that maybe it already had an HVAC system that was only a couple years old. Maybe the hot water heater had been replaced, or maybe you did that in your renovation, okay? But hopefully this property is pretty much updated to a point to where you shouldn't have a lot of CapEx, okay? You still must account for that. It's very, very important. And I'm going to talk about towards the end of this video what I would recommend doing, because this amount is very bare bones minimum, okay? A lot of people don't even factor this in at all, and then they get in trouble. But vacancy, repairs, and CapEx, $275. So that's a total of $1,663 in expenses per month, all right? Now remember, you're getting $1,850 a month. So your true cash flow, pure cash flow, when everything's said and done, is $187 a month. Now, I know probably what you're thinking. If this is something, if you're a newer investor and you're going, what? $187 a month? That's terrible, right? That's what is that? Well, this strategy is an accumulation strategy. And so as you grow as an investor, as you start to earn more money, you're not necessarily going to do this type of strategy. If you're someone that has a high W-2 right now, and you're really looking for tax benefits and you're looking for high amounts of cash flow, you would not do this strategy. You would move some levers, okay? So what levers could a person move to increase cash flow in this scenario? The first lever that they could do is They could obviously leave equity in the deal. And so basically what I mean, or leave money in the deal. So what I mean by that is when you refinanced at 160, instead of doing that, maybe you only refinanced at 120 and then you were out of pocket that $40,000. Okay. Maybe you didn't borrow the money to do the down payment and the holding costs. Maybe you came out of pocket for that. So that's one way. But again, in this scenario, remember, the person doing this deal doesn't have any extra money to put in. So what is another lever you could pull if you don't have the ability to leave money in the deal? And that would be to buy it at a deeper discount. Now, I will tell you right now, this deal, to buy it for $100,000, to put $40,000 of renovations in the deal, and the ARV to be $215 after that, it's a good deal. This is a good deal. And I would tell you that as a new investor, it's going to be tough even to get these numbers to work, to get deals like this. But if you're trying to buy it even deeper, it gets even more difficult. It's not impossible though. And so you need to understand, depending on what your situation is, you've got to understand that, there's different levers that you can pull, but when you pull different levers to make good things happen, sometimes it makes it harder to get a deal, or if you tighten up your underwriting, obviously there's going to be tougher to find the right deal that fits in that box. But those are the different levers that you can pull in this scenario. But $187 a month is all you're looking at as for cash flow. All right. But let's look at what you got. You now have an investment that has $55,000 of equity built into that investment. All right. Which is pretty amazing when you think about it, because just remember for a second, how much of your own money did you have to put into this to turn something into $55,000 of equity? Zero. You didn't have to put any money in there. Think about, I'm going to be shooting a video or publishing a video in the next week or two about savings and investing in like the stock market. And I'm going to show the difference in doing that versus investing in real estate. We're going to kind of show you the two and kind of analyze the two different strategies. But for this, you've literally got an infinite return because you have $0 in the deal. So your return, your ROI is the little squiggly line. It's infinite. Okay. So now let's talk about the strategy to get to over $3 million of real estate. So in year one, you're going to do this exact type of deal 3 times. Again, I know many new investors are going to say, well, how do I do this? Check out the channel. I have tons of videos on the channel about how to find deals. In fact, like I said, subscribe if you haven't. You're going to do 3 of these deals in year one. Now, by year 2, you're going to end up doing 5 deals in year 2. All right, because you're getting much better at your marketing, your understanding, those sort of things. And in year 3, you're going to do 7 deals. All right, so you are literally doing, if you averaged it out, you're going to be doing a deal almost every 3.5 weeks or so. So people would say, that's impossible. You can't do that. Yes, you can. I've literally bought properties. I bought 8 properties at one time before. People do it all the time. You can buy portfolios. Okay. You can actually, with this, you can look at it in a little bit different way, and you could actually look at doing units. So you could start buying some duplexes or triplexes, and instead of saying 7 houses, maybe you look at trying to do 7 units that still make these numbers kind of fit in. But we're going to keep it simple because, again, we're just going to talk houses. So 3, 5, and 7. Okay. Now, oh my goodness, what if it takes me 4 or 5 years to do that? Okay, it's okay, that's fine. But for the purpose of this video, you use the strategies that we talk about on the channel, and you're able to buy over the course of 3 full years, you acquire 15 houses. Okay. And again, I just keep it kind of nice and neat. And to keep things simple, each deal is in essence, the numbers are the same. Okay. Maybe some deals are a little better, some deals are a little worse. They average out to be the same. All right. What does that end up looking like at the end of 3 years? First of all, you now have $3.2 million of real estate, which is amazing because this strategy, you have literally put in no money. Now, you've put in a lot. You've put in a lot of time and sweat equity. You've still got a job, or you still have some other source of income that you're relying on, so we're going to assume it's a job. So you are working your tail off, especially when you start getting into doing 5 and 7 deals in a year. You are working your tail off, okay? It's not going to be easy. It's going to be very hard, and most people will fail because they don't stay the course. But you haven't failed. You've done it. You've put the work in. You've got educated. You've done the things. So now you've got $3.2 million of real estate. But here's what's amazing about this. There's all these other benefits that you have. You have all these tax benefits. What about that little measly cash flow, the $187 a month you were getting? That comes out to be $33,660 per year in cash flow. Now, should you go out and buy that Benz you've been wanting to get? No. What you need to do, obviously, is you need to take that and set that cash flow aside so that you can build up a reserve account, okay, and have some reserves built up. And eventually, that cash flow is going to continue to accumulate. And if you just let it ride over 3 years, now you've got 6 figures sitting in the bank, okay? So think about that for a minute. I know that sounds like, but do this at the end of 3 years. Don't buy any more real estate and just continue to work your job, and your cash flow will turn into $1 million or $100,000 over the next 3 years after that. So that in itself is pretty spectacular. But here's where the magic is, okay? And here's what I don't want you to sleep on. The equity that you would have built up. In other words, your net worth, your money that you have in that real estate after the debt is serviced and everything is said and done with, you would have $825,000 in equity in 3 years. All right. Here's what I'm not factoring in. Okay. Here's what I'm not even factoring in. I'm not factoring in the appreciation year over year. I'm not even factoring that in. So we're not talking about even these properties appreciating. I'm not talking about the fact that rent historically goes up year over year. And when you look at averages, I'm not even talking about that. So your cash flow is going up, your appreciation is going up, and your debt, guess what? It's going down. It's being paid by those tenants. Okay. So very, very, very soon you would be at $1 million of equity, meaning if you wanted to liquidate the properties, you would have to pay realtor fees, closing costs, those sort of things. But it wouldn't take many years for you to have $1 million of equity built up in these, just letting this ride and not doing any more deals. Okay. Now, let's talk about, is this something that you should do forever? No, this is not something you should do forever. This is something for someone that doesn't have money to get started, and they're looking at doing something other than like wholesaling, or they're looking at doing something other than trying to flip properties. They're looking at trying to go in and build a portfolio and build true wealth. All right, the strategy, I've talked about it a lot on this channel. There is a video series that I've created for this entire strategy. All right, I'm going to put that video in the notes, in the link in the notes below, description. That is the BRRRR Mastery series, okay? And it's a 5, I think we got 5 videos in that series. That walks you A to Z through that. I'm also going to throw in a free guide in the description. I'll put that link in the description below of how to go through the BRRRR step by step. That's what this process is. And so you can do that. You can literally do this and not have any money. But this is, again, something over time as you evolve as an investor. You're not going to do this forever. Okay? You're going to eventually get to a point to where as your assets grow and you build millions and millions of dollars of real estate assets, you're going to get to a point to where growth is not as important as preservation, as mitigating risk, as you're going to start to want to deleverage a little bit. And so it gets to a point where you're not going to maybe want to leverage at 75%, loan to value. Maybe you're going to get to a point to where you use less leverage. Maybe you're going to get to a point where a lot of people get, where I'm looking at like, okay, I want to like start eliminating some of these notes. I want to start paying down these things, get them free and clear, and just have millions and millions of dollars of free and clear real estate. Like that's what helps you really sleep well at night, because then you don't have to worry about, what happens if you have vacancy, that sort of thing. So this is a great strategy, as I said, for someone without money, without discretionary money. They got to have money to survive, to accumulate real estate. And as you see in this strategy, we use 3 years. It might take you longer. Okay, that's okay. It might take you 5 years to do this. It might take you 7 years to do this. You could do this over 7 years, and you could literally only average buying about 2 properties a year, and that's very easy. and be in a place where you've got 15 properties. And so I wanted to share this with you, and I wanted to make sure I specified who this video is for. If you have interest in learning more about how to do this, this is one strategy. This is one strategy, y'all. If you want to learn more about how to use different strategies based on your specific situation, whether it is that you do have assets, like maybe you've got a lot of money and that you're sitting on, and maybe you're looking at getting involved with real estate, this probably wouldn't be the strategy for you, right? Maybe you have a good high-paying W-2 job and you have some time on your hands. Maybe it's a job where you have a certain amount of days off. Maybe it's something to where you're in a situation to where you are really looking to try to mitigate a lot of tax liability. Everyone's situation is different. And the great thing about real estate investing is there's tons of strategies. And so I encourage you to check out. We've got a private community. We have tons of content. I have a course that I've created. I'll put that link in the description below. It's a 2.5-hour course. I'm giving it away for free. You're not having to pay a dime for it. 2.5 hours. It'll be in the description. It may even pop up at the end of this video if you're on the YouTube app. But check that out. But get educated, subscribe to the channel, and know that real estate investing is not out of your reach, even if you don't have any funds to do so at the moment. As always, I appreciate you watching. I look forward to seeing you on the next video.